Hello and welcome to Connect, the weekly podcast of the California MBA featuring one-on-one interviews with movers and shakers in the mortgage industry. I'm Susan Milazzo, CEO of the California MBA, and I'm very happy that you could join us today. Before I welcome today's guest, I'd like to thank our 2024 President's Council sponsors. And these are companies that provide a tremendous amount of financial support to the California MBA, in large part so that we can continue to be that strong voice for the real estate finance industry before the California State Legislature and our regulators. So please join me in thanking this year's President's Council sponsors, and those companies are AmeriHome, Arch MI, CMG Financial, Consolidated Analytics, Funding Shield, Guild Mortgage, and Western Alliance Bank. Thank you all so much for your support this year and in previous years for many of you. With that, brings me to welcoming today's guest, who's welcoming back to Connect, Greg Vacura, who is President of Agile Trading Technologies. Greg, welcome back.
Thank you. Thanks for having me again.
So as we said, you've been a guest on Connect in the past, I think just last year. So how's 2024 gone so far for Agile?
It's been a really great first half of the year. We've grown our company, we've grown our dealer base, so we have 25 liquidity providers on the platform. We were up from 18 at year end. So a lot of new dealers on the platform, along with all of the same dealers that have been on the platform previously. So it's been a great start there. We have 10 new lenders to the platform.
Wow.
Unfortunately, a couple lenders have dropped off because of various troubles with the times, but we do have 10 plus new lenders to the platform as well. And we've seen volume increase throughout the year. We're up 32% with volume through the platform since January. And it's been kind of steady month after month. We've seen a little bit of volume increase every month. So that's been a nice trend. And we've introduced it. Go ahead.
No, I was going to say congratulations. I think when we talked last year, you were kind of just getting the platform started. So that's incredible. Congratulations.
Yeah, it's been nice growth. They had some good momentum in before I came aboard, but the momentum's continued. The team is really gelling together, and it's been great. And
that's wonderful.
We have a new product type on the platform. We are now offering fourth month trading options, so fourth month pricing. So dealers and mortgage originators typically go out front month, middle month, third month, but we have a fourth month TBA option, which is primarily designed only for mortgage originators. Most of the industry, a lot of trading in the industry and TBAs is not mortgage originator based. It's big institutional trading, and they don't need as much coverage out into the future. But from a mortgage originator standpoint, that extra month of coverage is good, especially for builders. And it will be really key when we get into, hopefully, knock on wood, a little bit of a refi boom. So if companies need to start prioritizing some of their pipeline, purchase versus refi, and if you have, say, 10-15% of your production tends to drift out of the third month options, then you may need some extra time. Well, if you continually see you need more time, and you can start taking some positions down further out, you may not know which loans are going to be out there, but if a consistent trend is emerging, take fourth month pricing earlier, which has typically less cost than rolls or some other maintenance items. So it's another option for our mortgage originator base on the platform, which is the whole platform. So we really just cater to mortgage originators.
Excellent.
And we also introduced, for illiquid coupons, a pricing indication pricing availability. So lenders can request pricing from dealers, and they can request it on the whole stack of coupons, but usually they want to know it if it's some of the fringe coupons, higher or lower, and spec pools. We also have spec pool indications available as well, and that takes a little bit of the pressure off the dealer. If we expect the dealers to be pricing live quotes first, but if they have this moment where they can get back and provide an indication for the lenders, they'll do that as well. And in the past, sometimes lenders would put a price out or a request out, and the dealers would think it was a live trade. They'd put a price, then the lender wouldn't hit it. well, instead of having kind of that false bid go out, let's let them have an indication so both parties know what it is, and you know, kind of a service for both, for the lender certainly, but then an ease of use for the dealer to know that if they miss one, you're better to miss an indication versus a live bid and an opportunity to win a full trade. So yeah, it's been a really good first half so far.
Good. It sounds like you've been very, very busy. What are some of the priority initiatives for you for the balance of this year?
Yeah, we're really looking to expand the usability for the dealers and the lenders, and we're coming out with limit orders. Knock on wood, it'll be there before the conference starts, but if not, it'll be soon follow thereafter. So limit orders will allow the lender to request a specific price on a specific coupon, send it to a targeted to one dealer, and then they can give that dealer more time to work that bid. So if it's the liquid stuff, easy peasy, the dealers have access to that market very quickly, but sometimes the dealers may need to find additional access if it's a fringe coupon or some nuances to it. So we're allowing the lender to put in a limit order, and they can choose to give the dealer 5, 10, or 15 minutes to work that deal and come back if the dealer can find that price that the lender is requesting. Sometimes it can really benefit the lender because they know, hey, I have that price, I want to pin it, and there they go. Mm-hmm. Other times it could be a risk if the market starts to fade away before that price is found, then they'll have to reset their expectations on what that price would be. But another option for the mortgage originator to go and pick a specific price to go forward with. We also are looking at creating a dealer admin portal so the dealers can have more maintenance features on the lender accounts. So I mentioned earlier, fourth month, we're looking to expand fourth month option out to 8, 9 months. In order to do that, though, the dealers are comfortable in many cases allowing that extra fourth month to their whole client base. But sometimes they're like, hey, I'm not really comfortable with certain lenders based on whatever criteria the dealer is looking at going out 8, 9 months. So instead of having a blanket approval for the whole month spectrum we're going to be offering, it's just going to be broken down into more granular parts so the dealer can manage each lender relationship specifically. And we need the system to accomplish that so the lender can know right away if they're approved by which dealer to go out that amount of time. And the dealer may be willing to give a certain level of liquidity up to 4 months, but they want it less at 6, 7, 8 months. So maybe they are allowing a lender to go out and take 100 million of coverage at any given time, but they only want them to maybe take 20 million of coverage past 5th month. So it just gives the dealer some options in managing that lender relationship, which will be beneficial for both sides. And the last big thing we're really doing is we're investing in technology. We have 4 parts of our platform that we're looking to improve on. We hired a design firm for the first half of the year. They created some really nice new designs for us, and so we are going to start implementing that. We've got the implementation firm hired, and they're going to help work with our technology team to get this stuff faster than we could have built it internally. So we're making an investment in the platform in the future. And first off, TBA bidding on the dealer side is going to be improved, along with our lender bidding for pools. So we have a few clunky things now. I don't want to really say that out loud, but I did. On the lender pooling side, it's certainly a very usable, efficient system, but we know there can be some upgrades to it. So we're looking to invest into the future as well and come up with some new user interface and user experience designs that'll be beneficial to both parties.
Well, it sounds like some amazing tools for lenders. Congratulations again to the success of Agile, and especially it seems like in a very short period of time, at least from my perspective. I also see that Agile is a sponsor of the CapitalW Collective, and I've had the opportunity to talk with them this year. Sounds like a fantastic organization. Can you tell us how you became engaged with that organization?
Yeah, the CapitalW Collective is really about inclusion, advocacy, and expanding experience for women in the capital market space. And at my last organization, one of the founders of CapitalW, Pat Peters, along with Leslie Winnick and Amy Creason, they started talking about this idea to get more exposure in Olympics. And it's really the train's leaving the station on bolstering advocacy and opportunities, and we're really proud that Agile's on board with that and wants to make a part and have a difference in that side of mortgage banking. There's really a definite lack of female presence in capital markets across all financial services, but targeted to capital markets where we can have a difference and help do our part to help move this into the future.
Wow, congratulations again. Sounds like a great organization. I know that some of the representatives are going to be at Western Secondary Market Conference as well, so I look forward to seeing them there. Well, I think I'd be remiss if I didn't take an opportunity to talk about the rate environment a little bit. And I know that no one has a crystal ball, but what are your thoughts about the rate environment going into 2025?
Yeah, thank you. The interesting part is, rates have stayed higher longer than we all anticipated. We were thinking there was going to be, were there going to be 5 cuts this year, 6 cuts? Now will there be 1 cut? But really the ongoing feel right now is, based on the last Fed meeting, it's that September cut is kind of entrenched where the expectation is. The market has built in that cut. So if they don't cut in September, it will be, who knows what will happen. Let's worry about that if it happens. But really the feel is rates should be, Fed should move in September. But like I said, the market's really already priced for that expectation. But then when's the path of future expectation cuts? And we think there may be 1 or 2 more this year, and then into next year. And really, the good news is, the silver lining in this is we have a lot of mortgage production that's been stacked up in that high 6, low 7 range. So, we've been here much longer than expected, but being that we have more production stacked up in that range, once we get a cut, there'll be a bigger population of refiable volume out there to be had. And hopefully it's timed right so that extra little refi boost comes in the tough winter months, December, January, February, and we can get a little boost there. And then, as we know, there's a lot of pent-up house movement demand. People that are in a house that may need to downsize, it's tough to get out of your 3% mortgage to go and get a new mortgage at 6 or 7, 7.5. But if the opportunity presents itself and we can get down into that 5 range, it's not as much of a payment shock when you're downsizing. Certainly it's tough to downsize and then have the same payment. So if you're downsizing and get a little bit of a higher interest rate, but you're ultimately getting a lower payment with your smaller house, that can happen. So a lot of different purchase moves, and that's just one example there. But we think just a little bit of relief on the rate side will spur on a little bit of production in a variety of ways, which will really help lenders into 2025.
Yeah, that would be fantastic. What was the saying in 23 or 22? Like survive until 25. So maybe that's what your prediction is consistent with now. It would be great if we could get some relief in that environment for a number of reasons in California, especially with our high prices and our insurance crisis and everything that is happening in our state. So thank you for your outlook for maybe the next 6 months. Greg, Agile is a sponsor of our big CAMPAC Golf Tournament, which is actually being held today, Monday, August 19th, to kick off our big Western Secondary Market Conference. Thank you so much for your support for that. We appreciate it. Can you share with our listeners why Agile chooses to support our organization?
There's a lot of reasons. I'll start selfishly. Selfishly for us, we get visibility and exposure. I'm really excited to be out on the course. Meeting and greeting and saying hi to people. Not going to be pushing the sale of the platform on the course, but just seeing how people's rounds are doing. And we're a beverage sponsor station, so I'm excited to get out in the beautiful California weather and enjoy that. So there's a little bit of selfishness there, but bigger picture, events like this conference really bring the industry participants together. We get to hear the same messaging. There's always a lineup of exceptional speakers and panelists, and the side conversations you have with your industry peers is really, really important. It can broaden our horizons. You see different things, you can hear different things companies are doing that may help your organization, and vice versa. And you can learn about new opportunities. And we come together, as we come together as an industry and all do well, we can all, it's a rising tide floats all boats. A rising mortgage industry helps all the participants. We need very strong originators in the mortgage space. And conferences like this really help them gain an edge and or learn some things new that can help reduce costs or whatever. So it really pulls together a lot of industry participants. But beyond that, there's a deeper value that a lot of times is hidden. We don't see all the advocacy work your organization and others do in the industry, and that really matters behind the scenes. While the lenders are out there having to worry about their production and their operations and everything, group makes sure the voice is heard for the lender and the borrower in the mortgage space, and hearing those updates firsthand and knowing that you're advocating on behalf of the industry really is a side benefit that I think a lot of people don't notice or see. They love the conferences, getting together face to face, but the other 362 days a year, there's a lot of behind the scenes things that's being done and taken care of by the organization that's really great for the industry.
Well, thank you. We really appreciate that. I'm grateful for your support and that of MCT's. Agile has been a great partner with us, and thank you so much for being back on Connect. It was nice to have this chat today.
Thank you very much. It's been wonderful. Have a great rest of the conference.
And thanks to all of you for joining us today. To access any of our past episodes, you can follow us on our YouTube channel. We're also available on SoundCloud, Apple Podcast, and Spotify. That's it for this week, and we'll see you next time on Connect.
Here we go.